Good morning, everybody. December 12th. Let's just check the audio here and make sure that you can hear me. It should be on speaker. That should be a little clearer. Let me know. I'm on a dedicated computer for this today. So I'm trying something a little different, and it should hopefully work out really nicely. But we'll see how this plays itself out. Now, in regards to what we're saying, oh, hold on. I actually made a graphic. Look at that, huh? Who's a winner? I am. All right. So I put the graphic down here instead of me saying the same thing over and over again, that the free newsletter link in description and the symbol because it's badass. And this is where you can follow us, but it just makes it easier. If you're interested in trading community, the link is in description. Okay. It is on waitlist. Let's get to it. There's so much to go over here. And there really is. There's just a lot for us to address. So let's just start addressing it. Now, we have to just look at a couple core concepts here, right? Before we even get into it, we have to understand that no matter what happens, we have to deal with the Fed tomorrow, right? We have to deal with the CPI data. So no matter what you do today, I can't hammer this out enough. I'll even tell you what I said in the private video. This was last CPI. This was the CPI last time. Okay. You're going to have a 2 to 3% swing, period. Okay. It's not debatable. This is what happens. And we need to be very cognizant of that. We need to be very aware that that's what happens here. And I can't stress that enough, that you're going into an environment that is really very volatile. So I don't really see the need to sugarcoat, what we're seeing here. Now, I do want to say a couple things while I have everybody. Watch 1 o'clock and watch the 10-year note. Watch how we act at the 10-year note today. It will tell you how people are positioning for tomorrow. If you see a lot of buying in the 10-year note today at 1 o'clock, that means that they're comfortable with the CPI number. Now, this is the leakiest Fed I've ever seen in my lifetime. So just kind of keep that in mind, okay? Every major firm has come out today. I mean, the big four have come out today and said 50 basis points. If we don't see 50 basis points, that's going to be a real problem for this market, okay? Like a real problem for this market. So keep that in mind. I can't stress that enough. It's going to be an issue, okay? So this is where we're at, and this is what we have going on. Now, what do I think is pertinent? Well, I think that you should be watching the recent lows of any name. And I just think that's how you should be set up on the day. And if you start taking out these lows, it tells you which way you're going to go. I don't know that, you could easily take out this low and then, rally. Absolutely. Could you do that? Absolutely. I think the chances of that are pretty rare. Usually if you take out a low and then you rally up, you go from there and you'll see. I'm not so sure that we would rally up here. And I think that's something that we're really going to have to watch. Watch Tesla as well. But, I keep looking at this and going, can it be this simple? Just being honest, like, is it really going to be this simple that we're just going to keep rejecting the 200? And I'm just not convinced that it is going to be that simple, but it is the same exact pattern we got here, same exact pattern we got here. And I even walked through this in Saturday's video, which I would strongly suggest people watch. Even here, when these crosses, like, it's so obvious. And I think that's the problem. That's the biggest problem I'm having with it, is it's so obvious what's going to happen that I just assume that it's not going to happen because it's so obvious. And maybe that's a misnomer, but that's where my head is. Now, names like Netflix did really well, but you rallied up and now you've got this shooting star to the downside. That's not ideal. So we're not really seeing a lot here that looks, ideal. And you are seeing Weber that got that buyout offer at roughly 805. I mean, there's 10 cents there. It's not really worth it for me to look at something like that. But these names are starting to crack even this morning. And I know it doesn't look like much that you're down like 10% or 10 cents or 15 cents, but just the mere fact that you're already starting to roll a little bit and crack on these today with the Binance news about stopping withdrawals on, quote, certain accounts, that's an issue because people are going to be panicked. So now, in regards to the NASDAQ, key takeaways, held the breakout low, under amount of support. What do we really see here? Well, we're not really breaking down. We're not really breaking that breakout bar yet, right? So you're just going to want to watch how you respond in here and go from there. But that's what we're seeing happen. Now, UNG is one bright spot where people are getting excited because of the agreement the US and the UK had. So we're going to have to see how that plays itself out. But could there be something there? Could that rally? I mean, it could. The majority of time that it does this, it's been fading. This is a death cross. Okay, do with that what you want. This is a death cross. And so we have a death cross, and we're retesting that level on the death cross. Do with that what you will. Let's take some questions. As always, please like this video and subscribe to the channel. I specifically don't have sponsors, and I specifically do not run ads. So it does help with the algorithm when you subscribe and like the video. Major 3 choppy. Yeah, I agree. The VIX does, John, 100%. If you look at the VIX and you see what's going on there, 100% that is what happens. And you can see that really very clearly here on how you're cracking. I mean, it's glaring. Now, one obvious solution to this is UVXY, right? And you can see how you are, right? So you respond. Now, all these are marked. Those dates are actually marked. Hold on. Let's get rid of these. We'll remove all the vertical lines, actually, and then I'll just show you this. Remove our vertical lines. And what you're seeing here is these are when the DTLs actually changed, right? When those DTLs changed, okay, this is what happened. All right, so can you see something like this? Yeah, maybe you can get up to that 9-10 level. That's possible. We're going to just kind of have to see how it goes and kind of go from there. But that's really what I see there. And I do think it's an issue. And you need to be aware of it. You can't say you don't see it. And your option trades are just simply not going to work the same way because that exists. So we need to be cognizant of that as well, okay? So just keep that in mind. But absolutely, John, you should be watching that. I'm watching it like a hawk. The other thing that's got me a little concerned is this. If we look at the 10-year, oh, I don't know what that is. Hit the wrong button. And if we look at the 10-year, and then we just put in the 5 SMA, take all this other stuff out, the fact that we're flipping this and we're trying to get over that level. So if I can break over this right here, that's going to be troublesome to me. And I have this, and I know people say, oh, don't chart the yield, but I chart everything. Just everybody's different, right? But I chart everything. I mean, I think you can chart everything, just the way I feel. But if you take a look at this setup, so here's my concern with this setup, right? I have a peak here and I have a peak here. So I have that negative divergence, right, in the MACD, okay? But I have a buy signal, meaning that yields are going higher. The last buy signal was here, all right? So what the heck is coming? So the last, just so we're clear on this, one of the greatest sell-offs in the bond market, okay, was this signal, right? And look at it, and here it is again. So to not pay attention to that, to not pay attention to the VIX, okay, I mean, I get it. You're not supposed to use these kinds of metrics on it. Whatever. It works, okay? Because you're not supposed to chart the VIX apparently. But I chart everything, and I think that this is absolutely glaring as a sentiment indicator. I don't trade off of MACD, but to utilize it as, hey, which way is sentiment leading? That makes the most sense to me. And this is what I see happening. And it's a real issue. We will be live, and I will be streaming way before 8:30. So I'll make sure it's live so that we can all talk about it, go from there. Now let's just keep going. So, Man U, yeah, I'm starting to lose faith a little bit there. I'm not going to lie. So Netflix and the video, some accumulation signs too. I like both those names, John. I do. I like both those names, but here's what I have to deal with. Now, I'm going to say this as somebody that's long. I'm currently long NVIDIA, but we're rejecting right into this, right? And that's a shooting star. So I better reverse today, or that's going to get super ugly. Like that's going to get really ugly. So, I'm just going to have a higher low, and we're going to have to watch that. But now, and this, look, I was long and I did okay for a little bit. I was like a hero, but then that was the end of it, right? And now you're having these little, look at these patterns, right? So you're seeing these little patterns everywhere, and you just saw the other one. So, rising wedges like this, when I say that, you clone it right here, right? And you just drop them in, you can kind of see where they sit, right? They end in tears usually, and that's not making me happy about Netflix either. So here I've got this, upward triangle line, and now we're right in here. And, that's what we're seeing. So they don't always work. Sometimes if they're in a flag like this, because I have this as a flag pattern, sometimes they just don't work. Is this trade over because we didn't break out? I don't think it's over. I think what's fascinating to me is that we might be washed out of one sector like this. I think we might be washed out of the socks, meaning that they've just beaten it up so much that maybe it does start flatlining and they go after greener pastures as far as shorting. And it seems to me that those greener pastures look very eerily similar to retail. When I start clicking through the retail names, like they really look like they're the next ones that can just, absolutely collapse, or at a minimum, start testing these 55-day moving averages. And then you just look at some of these biotechs, and it's like, these have straight shots down. So I think they're on to the next sector on what they're going to short. And I don't think that next sector includes something like I don't think that next sector includes something like semis. I could be wrong, but I find this strength in this. Like if you look at the indexes, right, and then you see how we held in here, there's something to that. Like, why didn't we break down, right? Like, why didn't this absolutely break down when everything else broke down? The fact that Apple went down and they're reopening that level, they're reopening that. So I get asked a lot about why I use a 55. And if I would just suggest that if you put the 55 there, you'll get a cleaner reading sometimes. And what I like about it is maybe I don't get that roll down, right, as fast as you would on a 50, but it's way more specific when it happens. So there's a bunch of reasons why I use it. I'm not going to get into too many details. But I mean, here you are, look where it stopped, right? So maybe consider using a 55 instead of a 50 sometimes, just to see what happens. But you see this long-legged doji? I mean, to me, that doesn't get any clearer. Like, here's my bear flag, right? And then I have a long-legged doji right under the trend line. So you can't say that you can't say that this isn't, right, setting up to break. I mean, it doesn't get any cleaner. Like there's very little to do with Apple until it makes a decision here. And once it makes that decision, oh boy, it's going to be a monster. Because if you flip here, you're going to wind up heading up. So I think there's a lot going on here, John. I agree. Manu. So I have Manu, and I have puts married to it. And I think at this particular time, I'm just at max loss because the puts are pretty much worthless. And at the same time, the stock is not working. So I can't really lose any more money in the trade because of the way it's set up. If I was to look at this, to me, it's pretty clear that this is not going the way that they thought it was going to go as far as bids. So I don't know if they thought they had something and that Apple was going to do it or what they thought was going to happen here. But this is getting very clear that they might not have a deal. So I have stock and I have it married against puts. Those puts expire on quad witching. By the way, quad witching is Friday. So understand this week, CPI Tuesday, quad witching on Wednesday, okay? And then we have quad witching on Wednesday, and then we have a bunch of other things that we're really going to have to watch. So keep that in mind. Like it's going to be an issue. It's going to be a real issue. Like I can't stress enough that whole Fed meeting can change the entire outlook and technical charts of a market, because he's going to discuss terminal rate, and there people are talking up both sides of their mouth. So 2021 is what we really want to watch here, and we want to see how we act at that level. But I'm long this. It's not working. I have puts against it, but the puts are essentially worthless, and the stock is at max loss at this $20. So by Friday, it has to do something, or I just kick the whole thing out. Rule of thumb here, even looking at this, would just be to, if I was a betting person, which I am, would be just to close the stock outright and then just leave the puts on and see if I get a $2 or $3 move down on the fact that this deal doesn't happen, and at least recoup something on it. That's kind of where my head is with it. This is a pretty powerful move down. It should not really have done this, and it was incessant all day long. Now, I don't always put volume in, because sometimes I want the least amount of distractions on my chart in the morning. But when you start seeing this and you start seeing the incessant dumping, like 300,000 shares, right? End of the day, 300,000 shares. Okay. That's not a coincidence. All right. So keep that in mind. That's big selling in this name. And you can just see how the selling above on the day, like here, if you can zoom in on this and just see how the selling is above the line significantly more than the buying is. I think I have a problem here. So I'm protected, but it's starting to become a waste of capital, right? And I like my capital to make money, not cause me aggravation. So I'm losing interest. Hope that helps, Max. Coop and Boyle. So I think, it's up to you how you are viewing the world, right? So to me, something like Coop and these moves up, like, I don't know, what was this, earnings? Yeah. So, you're seeing good names being rewarded like this. I would tell you that I think that this fades on the day. So I would tell you that Coop fades on the day. And I'm just going to tell you why I think that. And it doesn't mean that I'm right. So one of the things about this name is, you're up and you're probably through all these levels, and it's probably a glaring and a great report, right? So here's your first thing, right? There's no way you're not retesting this at some point. There's just no way. So we're going to want to watch and see if this flips up, see how long it rallies. And then I'd be looking at the other side of this. That's just me. Now, I could be wrong. I haven't read the report, but first glance is, it doesn't matter how good you are, because people are going to want their money right now going into the end of the year. 80% of fund managers are down on the year. 80%. Now, if you take a look at something like AVGO, which had an amazing report, you got right to the top, okay, and your open was 551 and you closed down $6, right? You never got over that price. So I would be really careful here, and that's something that I'd be looking at on the other side, Michael. Now, if you take a look at Boyle, and I understand the interest in this because of what you saw happen with natural gas, can it work? Can that have bottomed out? It could. It could. That's not my kind of trade. I would be on the other side of that as well. I'm just going to be, I'll just be blunt. Like these kinds of trades, this is when you start looking at cold or NRGD, when everyone's puking it, right? That's when you start looking at those names. Okay. It's the same thing. Like XLE's up on this news. Okay, how's that been working out? Like this was this is the Keystone pipeline when everything, when the market ran, and now you're down here. So now you're bidding up again, right? So to me, I would be on the other side of that. I don't see anything redeeming about these charts. I think you're easily coming down here on energy. You're coming down another 5%. And I would just be on I don't think I could be clearer. I would just be on the other side of these trades. You can drill into this early in the morning and just see where you're at. And this is obviously when we open at 4 o'clock and how Asia responds to having access to our markets. So you have that gravestone. It doesn't really get much cleaner. and you can see your problem and your resistance, right? So maybe that's something for us to keep our eye on, okay? And if you go take a look at Boyle, you'll see the exact opposite, right? So if you watch Boyle and just watch that level, so you're holding for now. I have 2 wicks here. I'd watch my wicks very carefully there. Hope that's helpful. YILRFC. Let's take a look. YI. That is not something that I would be playing with. Anything that's that small, like anything that I can actually move, it holds very little interest for me. I'm not saying it doesn't work. I don't know what the, oh, look at this. Yeah. I mean, you can try. I mean, I don't know what the story is. I don't know why you're moving the way you're moving. It's pretty clear where where your pivot is up here. It's pretty clear that was a problem before, right? Like right in this area. Maybe that's a little higher. Is that a little higher? Yeah, it's a little higher, but not, 9 versus 7. I mean, it is what it is. It's not something that I would be, crazy about there and really thinking that you need to watch and take a look at. So, just take it with a grain of salt. It's just not something that I think that you have to rush into, but watch that level really carefully and see how it plays out there. Maybe that'll work. Maybe that'll work, but it's not something that I'd be rushing into. Hey, Jen, good morning. And what was the other one you had? LRFC. Let's take a look. I'm not saying this doesn't work. It's just not my kind of trade. So, I mean, something like this, again, you have no volume in whatsoever. And when I don't have volume, just grabbing a little coffee. So if I don't have volume, I don't really have an interest. And that really has very, very little volume. So keep that in mind. Now, let's keep going with the questions and see what we get here. What else that we have? We will be early tomorrow for CPI. Tesla, Amazon, absolutely. So again, I've got really real big emotions on this one because to me, it really seems like I have that 2003 feel where we keep waiting for it to break and then it's not going to. But if CPI comes in hot and they have to raise rates again, it's going to crush the high beta names and high tech. It just is. And that's because they're going to do PE contraction. And that's going to be somewhat troubling, right? So we really want to watch that. We want to see how that plays itself out. So I don't know. I don't know what you do there. For me, it's just an outright avoid for the time being until it picks a direction. And I just don't have a direction right now in that. I really don't. Maybe if it rallies, I'd be on the other side and try and sell it. But if it breaks lower lows and you try and short it, that has not been working, right? So you break a lower low and then it rallies, breaks a lower low and then it rallies, breaks a lower low. And then, so it does. It reminds me a lot of 2003 where we were buying puts and selling calls against the index and then all of a sudden, because we were going into the Iraq war and all of a sudden, the market just exploded and we had no reason to explain why, but that's kind of an issue. So I would watch this very carefully, but it's not something that I would feel the need that you need to rush into. I don't see any edge there. Amazon to me, I think it's toast, but I might not be there right now because here, look at this. Let me just show you this on the MACD. So I'm kind of crossing. I'm under the 0, but I'm not really breaking down. And then so I always just try to get a sense of these, right? And again, I'm not up here. I'm kind of down here, and maybe I'm still going to bounce around like this, right? Sell down, but At some point, there's going to be some kind of rally there. And I don't know when that is. But overall, names like Amazon, I think they have a real issue here. I think Amazon has an issue because a couple things. One, people are going into the store right now. They want to go into a store. They want to get out of the house, right? So that's the first thing. Two, you're seeing consumer spending strong for now, but that's off of personal savings. And I'll probably cover that in today's video. So just look for that video. I'm probably going to try and get it out a little early today. But consumer spending is plummeting and credit card debt is through the roof. So if you have that kind of situation, it's definitely a problem and one that needs to be addressed. There's no question about it. So that's really going to hurt them. And I don't see how it's going to be. I don't see how it's going to be helpful. I thought we had a shot at finding some kind of bottom in it, but we're not. And the other thing that should trouble you about something like a Amazon is just the fact that you can't even get back to the 200 day. Like you can't even get there and test it like the market did. And that's pretty telling to me. So Chewy and Rivian, let's take a look there. I mean, you needed to break through that 47 level. I do like how this is curling. People love their pets, and you're seeing the market try to pick it up a little bit. You're stepping in front of, earnings. I mean, maybe it works. There's probably a cross coming or there. Yeah. So you have that cross. Let's get rid of these. Right. So you have like these golden crosses. I mean, again, these are really hard. Like this is the death cross, and then you break over it and come back down. But these are really hard long-term signals to reverse. So take that for what it's worth. They're very hard for those signals to reverse. So maybe you have something there. Maybe there's something there that would be worthwhile. UV saw that. Good morning. Yeah, I'd watch that. What's up, Mil? LABU. So I'm a little concerned about this because to me, I like this cross, but I think that you could see weakness and come down and retest. So it makes it very difficult to say to buy LABU here because those names look like all the leaders look like they're in jeopardy. So, and here's the other thing about it. I can't get above that 55 and stay above. So I would be cautious until this makes a real decision here. I've been playing with this for some time, and I'd be real cautious here. I don't like the movement that we're seeing in these kinds of names. You're just seeing people just taking profits and getting out of the way. We have no leadership in the market right now, which is troubling to me. There's just no leadership. And it used to be, some of the large cap biotechs, and now you're just seeing them people just pulling capital out. This will be the next one. Gilead will be the next one, right? So you just kind of go through the big ones, VRTX, right? Any of these names, okay, breaks out a new high. This is what it does, and then collapses. Makes you wonder what you're doing with your life. So just be aware of that, okay? They're not names that I'd be rushing into right now. Honeywell, yeah, I like names like that. Honeywell, PG. I'd be careful with the consumer staples. They're at a high, right? So just make sure that they keep pushing. Anything like that. But I would tell you right now, like names like Honeywell, I really like that kind of space. But this is what I have right now. So that's not ideal, right? I mean, that's an H bear flag right there. I mean, it doesn't get any cleaner. So, I'm in Boeing. It's not working very well. So I'm not sure it's going to work before tomorrow. So there's decisions to be made today, right? Like how much risk do you want to have going into tomorrow? I mean, there's a lot there. Exactly. Right. It's a big, big week. What's up, Ant? What's up, Timo? Oh, is that what it is? Private equity buyout for Coop? I haven't read that. I'll look into it. That would change my opinion. I have not seen that news at all. It's interesting that someone's out there buying it. Epic shares are trading higher. They're going to get acquired by Tommy Bravo for $81 a share. Okay, that'll do it. Right after earnings, they announced that. Interesting. I don't know. Interesting time to buy a company, isn't it? Right. This is not when I would sell my company. I mean, it tells you a lot, right, about the state of the market. I mean, just deal with that fact here. Let's just go through this and clean this up. So here you are in January, and your stock's at 230, and now you're agreeing to be bought out for cash at $81. I mean, that's very, very telling. So I would be I'd be very surprised by that, and I'd be really aware of that. That's a really scary sign for software companies, in my opinion. Like, what you're selling your stock, 15% higher. You're selling your stock lower than where it was in April and May, right? I mean, that's a real issue there, and definitely one that is a glaring red flag to me in the software space. So keep that in mind. Something's going on out there. All right. AP Finance. I was looking at SBS chart. I'm noticing that every time Fed starts pivot, the price drops 40% from there. I'm looking at an SBS chart and that the interest rates and I've noticed every time the Fed starts pivots. Well, look at 1994 and 1995 because that's not an accurate statement. Go look at 94 and 95, and you'll be able to see that really clearly. It's absolutely not the case. JP Morgan, I have a position in this. It's not really lighting the world on fire. I have this cross, but I have to watch this level in here. And instead of just going through all the financial names, I would focus on this and see how this plays itself out, right? Just watch that. I mean, it doesn't get any cleaner, right, as far as direction. So I'm still seeing the possibility of a golden cross there, but, we'll have to see how that plays. And we'll go from there. Yep, please hit the like button. It helps greatly with the algorithm. Again, I specifically don't have sponsors, and I could easily be running sponsors in the middle of this and driving it, bothering everybody. And I choose not to do that. So I appreciate your support. A bit of bottom fishing, not actual today. Thoughts on PayPal? It's interesting because what's up, Cam? It's interesting names like PayPal, right? Because at some point you would think they'd get it together. And here's that dragonfly. Now, you've never broken that dragonfly. So this could be a bottom, right? That's a lot of buying coming in there. And I have a buyer, right? I have a real buyer out there. So maybe there's some support, maybe, but we're going to have to see how this plays out right now. We just are. It's not something I'd be rushing into yet. All right, I got to jump. I got to hop in the trading community. If you're interested in joining the trading community, there is a link in description. We are on wait list. Everybody have a great day. I'll see you tomorrow bright and early for CPI, and we'll trade live through CPI. Have a great day, everyone.